On the Express this week, the U.S. attacks Iran and global markets wobble. The Fed holds, but the split inside the FOMC is deepening. It's a tale of two blue chip stocks. They're heading in opposite directions. Dan Ives, the AI fortune teller, joins us for the drop-in just a few minutes. And our retail investors turning their backs on the Mag 7. We have that, the Investopedia indicator, and what to watch this week. Get your ticket. It's about to get wicked. Welcome back and welcome aboard to the Investopedia Express. That's right, live from the New York Stock Exchange every Monday at 10 o'clock. Was a podcast, now a vodcast, but you can listen to us on demand if you miss us here. I'm Caleb Silver, the editor-in-chief of Investopedia. Happy to be with you from the New York Stock Exchange, or just above the floor of the New York Stock Exchange here in downtown New York City. We are watching markets closely this week after the U.S. Hit Iran with those missile strikes over the weekend. We thought futures would show a real lower open here, but they are not. Markets kind of reacting in the green today as investors kind of weigh what might happen next. We're keeping a very close eye on the oil market as well. Crude oil futures popping a little bit, but sliding back down. That may tell us that there may be some quick resolution here, but we're watching that really closely as well. Also, keeping a very close eye on the dollar, typically a safe haven asset, and gold as well right now. But equity markets higher to start the week, and who knows what's going to happen. We'll probably hear more out of the White House later today on its intentions in the Middle East, but also Iran promising some retaliation, maybe a blocking of the Strait of Hormuz. We want to watch that very closely. Remember, we talked about it last week. The Strait of Hormuz is where 20% of the world's oil flows through on a daily basis. So we want to keep a close eye on that. Iran saying they may block it. But remember, Iran's biggest oil customers are Russia and China. So this is not just that Israel-Iran issue or Israel-U.S. issue. This is a global issue. And hey, we're talking about missile strikes here. We're talking about asset prices, but we can't forget, this is war, right? People get hurt. Civilians get killed. First responders get killed in incidents like this. We're talking about, devastation, but we're also looking at asset prices. Let's not forget the human element here. But right now, we've got to look at what's happening in the markets, and they are opening higher, which tells you investors think there may be a resolution here. We're going to keep a close eye. Again, the president of the United States, Donald Trump, calling for regime change in Iran. That is no small thing to say, especially in today's day and age. We have, again, China. We have Russia in the mix here. Again, Europe. Many countries relying on oil coming out of the Strait of Hormuz and out of Iran. So we'll keep a close eye on oil prices today. And we want to also keep a close eye on what's happening across the markets here. Looking at Investopedia's homepage on the top stories right now. Well, we're covering the markets. Our great news team is at it, covering what's happening in the markets, every tick of the market. But also today, Tesla launching its robo-taxi service, or making that intention known. I'll get into Tesla a little bit later when we talk to Dan Ives a little bit. Reports out this morning also that Northern Trust and BNY are in merger talks. BNY, of course, the Bank of New York Mellon, one of the oldest banks here in the United States, founded by Alexander Hamilton, just up the block here on Wall Street. They're potentially in merger talks. That could be some movement within the asset management space. We'll keep a very close eye on that. Another headline running through: Stellantis stock slipping under its new CEO. Tough times for automakers as they try to deal with the potential impact of tariffs, steel and aluminum tariffs, what's made here in the United States, what's not. So keeping a close eye on Stellantis, and then health insurers, according to Investopedia, streamlining their patient authorizations as they prepare for a new regime. But let's get into last week and what we heard from the Federal Reserve, because that was the big story last week. The Fed did nothing as expected, held interest rates right where they are. And if you're a Fed Chair Powell and the Federal Reserve, no reason to move interest rates lower right now. Let's hear what the Fed chair had to say at the press conference last week following that no decision to not change interest rates.
As long as the economy is solid, though, as long as we're seeing the kind of labor market that we have and reasonably decent growth and inflation moving down, we feel like the right thing to do is to be where we are, where our policy stance is, and just learn more. And in particular, we feel like we're going to learn a great deal more over the summer on tariffs. We hadn't expected them to show up much by now, and they haven't. And we will see whether, to the extent to which they do over coming months. And I think that's going to inform our thinking, for one thing. In addition, we'll see how the labor market progresses.
Keeping a close eye on the labor market here. The Federal Reserve does not want to be behind that eight ball. If we start to see more slippage in the labor market, we haven't yet. We had a pretty strong May jobs report. Unemployment rate holding at 4.2%, inflation checking in at 2.4%. If you're the Fed, that's Goldilocks. That's the sweet spot there. The Fed's got two mandates, right? It's got to keep prices stable, and it's got to keep the country at full employment, which is close to around 4%, a little bit higher than that. We've also heard of some layoffs lately. But if you're the Fed, no reason to move. But inside the Fed, among the Fed's board of governors, starting to hear some dissension, a little bit of a breakup there. We heard last week from one of the Fed governors, Christopher Wallen, saying we should be cutting rates sooner, maybe as soon as this July at the next meeting, and maybe again in the fall. Let's not wait, he says, for the labor market to weaken before we make those cuts. So we're starting to hear some pressure inside the Fed, and he may be jockeying Christopher Wallen, who is a Fed governor, to be the next Fed chair. He was appointed by President Trump. His term expires in 2030. And then there might be another nominee that might bring bubble to the top. That's Kevin Warsh, who also served on the Fed 2006 and 2011. Both of these gentlemen are what we call monetary policy hawks. They like to be aggressive with interest rates, keep the economy going. So we're going to see if there's any movement among shadow Fed presidents or presidents to be. Remember, Fed Chair Powell's term ends next May. 6 more Fed meetings for Fed Chair Powell. If he makes it that long, he says he will. We're going to be keeping a close eye on what happens inside the Fed, especially among those members. So no surprises there. We didn't expect that, but we did get from the Fed, which we get every quarter, the summary of economic projections. Within the summary of economic projections, the most boring yet the most important chart in economics, that's the dot plot. We got the dot plot last week, and it shows a couple of baby cuts this year. Take a look at that. Terrible chart, so boring. But if you look closely, you'll see cuts maybe this year, 2 baby cuts, maybe totaling 0.5%, bringing rates down to the 4% range. Look into 2026, you see rates right around 3.5%. Then moving on to 2027, that range as well. And then finally, longer run, Fed wants rates to be somewhere between 2.5% to 3%. But for right now, no cuts, no need to cut rates right now. We're starting to see the drumbeat of those hawks within the Federal Reserve wanting to make those cuts aggressively now to make sure we don't get a deeper weakening in the labor market. Let's talk about the tale of 2 blue chip companies heading in opposite directions, either 2 of the most widely held, 2 of the most important stocks in the market. And of course, we're talking about IBM, Big Blue, and we're talking about Berkshire Hathaway heading in opposite directions there. Chart there, courtesy of our friends at Y Charts. Look at IBM, up 30% so far this year, really riding high on the AI wave. Berkshire Hathaway shares only up about 7%. But since Warren Buffett stepped down or announced he will be stepping down, I was there at that meeting in Omaha. He'll be succeeded by Greg Abel. No surprise there, except the timing of it, although Warren Buffett is 95 or going to be 95 years old this summer. As soon as he made that announcement, Berkshire Hathaway shares are down now 5% since early May. And there's Greg Abel right there. Again, no stranger to Berkshire Hathaway. He's been inside the company for about 20 years, running a lot of the energy operations. He's a good operator. But then there's Warren Buffett and everybody else. So maybe the Buffett premium weighing on what's happening within Berkshire Hathaway here. I know we're getting some comments from some of our watchers here. Welcome to the show. Nice punchy recap. Thank you, James Early. Good to see you watching the show. And hello from Philadelphia, Silent Night. Hello to you, Philadelphia. What's up, brother? Hey, Ryan. Thank you. We like that you like the quick stories. We'll take all the comments you want. We're just starting this podcast out now, so join the conversation in the chat. Put your comments in there. We'll get to them if we can. We'll get to them later. If you don't catch us here live again, catch us on demand on your favorite podcast platform. So back to IBM and Berkshire Hathaway here. Again, what is it about these 2 companies? You do have a Buffett premium there, but the businesses inside Berkshire Hathaway haven't changed that much since Buffett made that announcement in early May. It's insurance, right? And it's energy. And insurance has its challenges right now. And we know what's happening within the energy markets, but not a lot of change except for the big change coming at the top. Meanwhile, over at Big Blue, the CEO there, Chairman Arvind Krishna, he is riding high on the AI wave. They're pushing IBM throughout the entire ecosystem, industry ecosystem. They're big in oil right now and AI consulting. They're big almost in every single industry. That stock up 70% in the past year, in the past 12 months alone. So IBM finding a new rally leg here going into the year. See companies, blue chips, pulling in different directions. Again, 2 of the most widely held, 2 of the most important companies in the stock market. That should tell you something. All right, coming up, we're going to hear all about AI from a guy who knows it better than anybody I know, one of the top minds and one of the top thinkers when it comes to the AI revolution, how we should invest in it. And this man's so good at this job, he's got an ETF named after him that is focused on the AI industry. Let's hear in a couple of seconds from our good friend, Dan Ives, on the drop in just a couple of seconds. Come on in. Dan Ives, welcome to the
What's
Express.
up?
Good to see you, my friend.
Great to be with you.
You just had created an ETF that really focuses on the entire AI ecosystem. The ticker, of course, IVES. What's it like to have an ETF named after you, Dan? Any pressure there?
No, look, I mean, it's super exciting for me because Cal, what this really does, it's a way for investors around the world that have followed me. It's an ETF that's all based on our research. The 30 names that we've used, the winners in the AI revolution, and 25 years doing this on Wall Street. It's exciting for me because so many investors that I meet wherever they are, they're like, "How do you invest in AI?" And this now gives them that opportunity off of our research.
And you've been covering this not just for the past few years. This is the space that you've been all over for over a decade as it's been emerging. So at Wedbush Securities, you looked at a lot of the ecosystem throughout AI. It's not the Mag 7, it's the Mag 7 and beyond. There's companies here that we're pretty familiar with, but maybe we weren't familiar with them as an AI player. And then there's the up and comers that are surrounding the industry in different places. I'm going to tick off a couple of names off the top 10 of the prospectus here. Of course, we have NVIDIA. Of course, we have Microsoft there. Taiwan Semiconductor, the biggest semiconductor maker in the world. Meta's there, of course, but then you have Oracle, real interesting play there. You have the Broadcoms of the world making the chips. Tesla's in that world. IBM, we just talked about IBM, but then you have some others around sound, around audio with AI. So give us the sense of the entire ecosystem that the ETF compromises, but also this is basically your coverage universe, and you're bringing some new names to light so investors like us can finally wake up to the fact that this is not a Mag 7 play only. There's a lot going on here.
That's exactly. I mean, like, look, if you go back, I mean, you've talked in early 23 and throughout, the whole year in 2024, you own NVIDIA, you own Mag 7, that's the early start of the AI revolution. But our whole view is as the second, third derivatives play out across enterprise, cybersecurity, autonomous, robotics, this is where it's all going. And as an investor, you can't just play the 3, 4 names. I believe you got to really play the themes. And look, 3.5 million air miles, right? Last 25 years. Like we spend all of our time on the road trying to identify who the winners are. But dude, this is a dynamic list. It's not like this is the list that doesn't change. It will continue to evolve every quarter as we find other names, and maybe there's other names that come off the list if I feel that they're not as much of a player.
Yeah, that's the beauty of the ETF. You can create, you can redeem, you can add new holdings in, you can reweigh it as you like. But broadly speaking, let's get to those big themes that you talked about here. Hyperscalers. When we think about hyperscalers, what kinds of companies are you talking about in general, Dan? You're talking about the big companies making the big spends on making sure they have a robust enough AI ecosystem so they can drive their productivity forward. What companies fall into the hyperscalers?
Yeah, and that look, it's obviously led by Nadella and Redmond in terms of Microsoft, which really on the enterprise side continues to lead. And then of course Amazon, the AWS side, Google and GCP. But look, Oracle, it's one of the reasons it's one of our top names because where everything's playing. If you think about it like a house, the foundation of a house, there's a foundation, and that's really the hyperscalers. The use cases be built on top of it, but the hyperscalers are the epicenter. And I only believe we're what, bottom of the first, top of the second inning of AI, and it continues to me. It's still 10 p.m. in the AI party that goes to 4 a.m.
Yeah, I'm ready for it. I got my shoes on. Cybersecurity seems obvious to us, but when I'm looking at consumer platforms, what companies fall into that world? Is that the Metas of the world? Is that the Apples of the world? What does a consumer platform for AI look like?
Yeah. So, well, first off, because look, now we're really, if you think about AI to date, it's all been about the enterprise, right? Led by Godfather of AI, Jensen, NVIDIA. hyperscale. But now when you think about consumer, Meta, look at Alphabet, what's happened there. It's my view, ultimately, Apple will be a consumer player, and clearly they've been behind. And then you think about you need to protect those workloads, right? And that's where names like Zscaler or CyberArk, Palo Alto are ultimately going to come in. Clearly, CrowdStrike is making more and more of a push there. Look, and this is where it's all heading. I mean, we're talking about $2 trillion that's going to be spent in the next 3 years. It's not just about two names, seven names. It's broadening out, and that's why we are so excited to do this vehicle now, which is all based on our research.
Now, I follow your research closely, and folks, we will link to the prospectus to this in the show notes. But if you're not following Dan Ives and following the great research out of Wedbush Securities, you are missing some of the most thoughtful research out there that's very forward-looking. Dan is, again, very steeped in this. But Dan, you talk about valuations and why we shouldn't be afraid of valuations. It's very difficult for individual investors to feel that way when they're like, well, that price is so high, it's come so far, it's come so fast. But we've been through technological revolutions like this in the past. And if you thought that in the early days of the internet, or if you thought that in the early days of cyber or 2.0 or the social media or oil or any big technological development, even telecom, going back into the 70s, you missed some very big waves that came after the big wave. Why should we ignore valuation? And what should investors really think about when it comes to building a strong portfolio of AI-related stocks? They could just invest in the ETF, or they could also follow some of your other research, but not ignore valuation, but think about some other things that might be more important at a time like this. You say we're so early in the game.
Yeah, and Kev, obviously you do such a great job, and you have for decades understanding the markets and your team. I mean, my view is if you just focus on valuation, you've missed every transformational tech stock the last 20 years. You cannot just sit there and put in some bucket PEDCF and then just leave. You have to understand where the growth looks next 3, 5, 7 years. Like I'd argue if Meta is not even factoring what I've used the consumer AI piece, Meta's a 4-digit stock. So that's why like we spend so much of our time, like let's say with Tesla, right? If you just viewed it as an auto company, you would have missed, obviously one of the most historic moves we've ever seen. Because I view it as disruptive technology, and I believe the future, and our team was down in Austin this weekend, is robotaxi and autonomous. I think autonomous is $1 trillion valuation alone to Tesla.
Tesla's in that group as well. Again, you say, and you said it before in the past, if you thought it was just autos, like you just said, you've missed the entire point of what they're trying to develop at Tesla and across a lot of other companies as well. Now, you also talk about the fact that we're early in this revolution, how early we are. But what does it remind you of? What other developments that we've seen in the past does this remind you of? Or is this whole new animal that is moving very quickly, and the dollars that we're talking about are at a much larger scale than any other innovative industrial revolution or technological revolution?
Yeah, it's a fourth industrial revolution. We just happen to be living through it. I mean, I don't even think it compares. As someone that covered tech stocks during the bubble, it doesn't even compare to internet. The reason is because of the use cases, the technology that's going to be scaled from enterprise to consumer, and also let's just go back like .com, bubble burst. That was a lot of it was startup driven, VC flood business model. This is really being backed by big tech, 325 billion being spent this year. And only 4% of enterprises in the US have gone down an AI path. None in Europe, none in Asia, ex China. So you look what's happening to, even when we talk about Middle East, right? I mean, my view is like even with the Iran situation, like, and I talk about Sunday morning is soon to happen after Saturday night. Like, I view it as bullish. It's positive for the market because my view is like, okay, I get oil and some of the catastrophes, but the black swan event is removed from the Middle East. It's a week in Iran. And now Middle East is open for business in terms of AI and the tech boom. Look what we saw with UAE. Look what we saw with Saudi. That's a whole nother market for NVIDIA, hyperscalers, everyone else.
Well, you talk about your Miles log just doing research on this. If anybody follows Dan around, you should follow him on the social medias of the world. He is everywhere. Literally, probably Delta's favorite passenger at this point in time, if that's your airline. But when it comes to channel checks, and this is what analysts like you do, this is your job. You don't just look at stocks and stock prices and price movement and read a company's quarterly report. You go and do the channel checks. Denzel Davis saying that's such a key point. Thank you, Denzel. But you go around the world when you're doing channel checks. What are you looking at specifically? Who are you visiting? Are you visiting vendors? Are you visiting the companies themselves? What is it that goes into the comprehensive research that you do around the spaces that you cover and that you cover so well?
Look, I mean, obviously in the US, talking to customers, partners, understanding what are the technologies, what are CIOs buying, right? So it just comes down to like, you can't just focus on quarterly reports and what comes in conference calls. You got to do your own work. And I think that's how we've been early on NVIDIA, Apple, Microsoft, Apple, and a lot of these other names. But when you look at Asia, I mean, that's why we're there 4 times a year in Taiwan, in China, suppliers across the board, what the demand looks like. And you're piecing together a puzzle. I mean, at the end of the day, that's essentially what we do. And that's why I never get caught up in sort of sentiment, and a company could have a bad quarter and everyone's like, oh, this is it. And I always say, like, look, when the bears are in their caves, they can't find AI in the spreadsheets. So I think our checks give us confidence that we feel like we understand the theme and do the work, right? Like, just like this weekend, like, there was no other analyst down there in Austin. Our team went down there Saturday night to do these rides. So I'm just trying to give you like examples of like, of course, we're gonna miss names, we're gonna have wrong calls, but that's our DNA.
Yeah, well, you've been all over, and you've been also very honest. When companies have a bad quarter, when they go through a bad stretch, you are the first one to call them out because you know this space so well. And I've learned so much from following your research, folks. If you're not following Dan Ives, thank you. If you're not following Dan Ives and Wedbush Securities, make sure you start doing that. We will put links in the show notes so you can do that. But make sure that you're checking in on him across X, across all the other platforms where we can find you. Dan Ives, Wedbush Securities, good friend, and also one of the more soothsayers out there when it comes to AI and what's coming around the corner. So appreciate your time and your research. Thanks for joining the Express, my friend. All right, coming right up after the quick break here, we're going to talk about money in motion. We know individual investors like us like the big AI stocks and the big Mag 7, but are we turning our backs on that? The money in motion coming up right away. Very snazzy animation by my team at Launch Live Media. Good job by you guys. All right, we'll have to talk about the movement of money. It's one thing to talk about what people are saying and listen to research from great analysts like Dan Ives and hear what's the traders and the brokers are saying down here at the floor of the New York Stock Exchange. But what we actually do with our money is something very different sometimes. And for so many years, retail investors like us have been piling into the Magnificent Seven stocks. You know the ones because they're in your portfolios today. We're talking about Apple. We're talking about Amazon. Of course, we're talking about Microsoft, Alphabet. We're talking about NVIDIA. We're talking about Tesla and Amazon. And we all own these stocks. We know they're our favorites, but I like to look at the money flows. What have retail investors like us been buying outside of our 401ks, outside of our IRAs? And when I want to do that, I look at Vanda Research. They are tracking what individual investors like us are actually doing with their money. And if you look at the retail purchases of the Magnificent Seven stocks, that trade has been fading lately. Of course, there was some dip buying. We saw that, but the average purchases by individual investors of these 7 stocks that are so dominant across the NASDAQ and across the S&P 500, they're the heaviest, they weigh the most, they're some of the biggest stocks in the market. Well, we've been kind of fading that trade a little bit. What have we been favoring? Defense stocks, defensive stocks, aerospace stocks. Why? Because there's a lot of tough talk right now out of the administration, out of our administration here. We have a world here in conflict. So you're seeing a lot of defensive plays by retail investors, but also a lot of quantum AI. To Dan Ives' point, it's not just a few stocks that are doing this, it's a lot of stocks. So we've been buying a lot of those, and AI-related baskets have actually been rising, as Vanda Research points out in that great chart, and we'll link to it in the show notes. Investors, individual investors, we're not playing around. We see the fact that this is a new, important, and significant development, what Dan Ives called the Industrial Revolution, the Fourth Industrial Revolution. You know, retail investors are all about it. If you look at that purple line there, that is individual investor, retail investors like us, our purchases of quantum computing stocks. We are all there, and we are all there in nuclear power over the last few weeks, over really since the beginning of the year. So if you want to see where the money's headed, Vanda Research does a great job of tracking what individual investors like us are doing with our money. But hey, we also survey our readers all the time in Investopedia. We have a survey out right now of our newsletter readers, the smartest readers in the world. And guess what your top stocks are? Your top stocks are the Mag 7. If you look inside individual investors' portfolios, like mine, like yours, like so many people with 401ks, you're going to see something very similar to this chart here. This is I love this. This is what we like to call a stock cloud of the most widely held stocks in individual investors' portfolio per the Investopedia sentiment survey we do every month. We'll come out with those results at the end, actually later on this week, and we will share them with you on the next show. But look at what you own. Do you own these stocks too? So many of us do. But do you own the stocks in the sectors that are actually moving in towards the future? And a lot of those are in the AI space. And great question here by Toheeb. How can you tell if a stock is overvalued? Great question. You can compare it to its sector. You can compare it to its competitors. You look at the price to earnings ratio or the forward price to earnings ratio. And if that ratio is much higher than its competitors in the space, there better be a very good reason. NVIDIA has a very high PE ratio, a very high forward PE ratio as well, because investors are expecting higher profits going forward, and that might be outpacing the actual stock price. So that's a good way to look and see if a stock is overvalued. Compare it to its competitors, compare it to its sector, compare it to the overall market. Tunde says, I sort of think Tesla stocks are volatile. Yeah, you better believe it. You better have a strong stomach to invest in Tesla. That stock's gone on 35, 40, 50% declines and made its way back. And Ryan Paul saying power stocks are heavy on his radar. More power. We're going to need more power. But can you actually make the right investing decision by following who's in office, who's in the White House right now? My team at Investopedia, we have a terrific data journalism team. We were looking at the best stocks under each president going back about 50 or 60 years. And if you think you got it right in Trump's first term when he was president the first time around, and you picked the right stock, you might have picked some of the right stocks. You're probably wrong. We have a graphic here of the best stocks under Trump 1.0, and the best performing stock, Enphase Energy. Does anybody know what Enphase Energy does? That stock was up over almost 11,000%. I said that, 11,000%. Followed by Trade Desk, not too shabby, 2,700%. Shopify, 2,300%. Tesla's on that list. My friend who just commented on that. And Mercado Libre, the terrific Latin American e-commerce player, was on that list as well. But Enphase Energy, folks, that is a solar company. And it was one of the best stocks we've ever seen, and especially under Trump's first term. They make solar cells, they make solar voltaic windows, power cells with solar, and that stock was ripping through Trump's first term. It's been one of the best stocks of the past decade, by the way. But if you think about what Trump's first term was all about, it was not about putting solar stocks in pole position or green energy, not at all, especially not this term either. But you could never be sure you're going to pick the right stock under the president. So it's just a little something we like to look at Investopedia. What do we think might be the best stock under any administration? We're usually wrong about that. That's why picking stocks is so hard. That's why ETFs are so popular and index funds are so popular. We can buy the basket instead of trying to be the best stock picker. Makes it a little easier. Direct D Buy says, is tracking senators investors still the best strategy? I never thought it was the best strategy, but sometimes they have a lot of inside information there. You can look at what Congress people and senators are buying and selling, and you know they're involved in the policy, but that's kind of hard work too, and you never know when they're going to be wrong. The best strategy, set an actual strategy for yourself, diversify across sectors, try to pick a few of the winners, load up on those, dollar cost average in, but have investing rules, right? What are your rules? What are your rules when the stock falls 25%, 30%? Do you have a threshold for that? When do you sell? Make sure you establish clear rules. Do some evidence-based investing instead of following what the politicians are doing. They can be wrong often. All right, coming right up, we're going to look ahead to what's happening this week, plus the Investopedia indicator of the week. What to watch this week with so much going on in the world. Let's get after it. Coming up, down the train, down the rail. All right, we got a busy week in front of us this week. We've got a few economic reports. We are also obviously going to be closely watching developments with Iran. with the United States and with Israel, and to see if any other countries get involved. There is a blockage of the Strait of Hormuz. We got to watch oil prices really closely there. So we're going to keep a close eye on that. In terms of economic reports, checking the Investopedia calendar here, we got existing home sales coming out on Tuesday. A report on consumer confidence for the month of May. Consumers were feeling a little bit better as we had an easing of some of those tariffs, or at least that reprieve out until July 9th. So we know sentiment improved a little bit. The market improved a little bit as well. Chair Powell, the Federal Reserve Chairman, will be testifying at the House Financial Services Committee, as he does at least twice a year, I believe. And also on Wednesday, he'll be speaking at the Senate Banking Committee. You better believe those senators and those representatives are going to be grilling him on why we aren't lowering interest rates right now. Everybody wants to be on the right side of this argument. Thursday, we got the second revision for the second quarter GDP forecast. Remember, when that first one came in, it showed a drop of 0.3%, coming off of 2.4% growth at the end of last year. So that was a big drop. Is that going to be revised higher? Are we measuring the right things? We'll keep a close eye on that. And then the personal consumption expenditures index comes out on Friday. That's the Fed's preferred gauge of inflation in terms of earnings. We got Nike reporting results this week. FedEx is like the canary in the coal mine. It's not just they ship packages around the world. They're a logistics company. If they feel weakness, we're going to feel it and hear it from FedEx. Carnival Cruise Lines, we'll see what the discretionary spend is like in the cruise sector. And General Mills, how much are our Cheerios going to cost if we do have tariffs? What is the impact of all that? A couple of key earnings to watch this week. And guess what? We're in that stretch of time, I don't know if you know this, where the market usually is at its worst. June 16th to June 27th, some of the most bearish days in the stock market, historically speaking. If you look at the Stock Traders Almanac, June 26th happens to be one of the very worst days of the year on average for the stock market for some reason. We don't know why. Sometimes it's just the way things go. So the wild cards for this week also, where we're going to get passage by the Senate on the big, beautiful tax bill. Close eye on that. If we get passage there, it will go to the president and it will get signed. So we'll see if we have that by July 4th when President Trump has promised. We'll get the extension of those tax cuts. We're obviously going to be watching Iran's response to the U.S. missile attack. June 26th, of course, we talked about that. And then we're screaming into the end of the first half of the year already. Already? Feels like January 89th, except it's really hot here in New York City. So we'll see if there's any portfolio movement, indexes being rebalanced, some late end of quarter buying or selling as portfolio managers reset for the next year. All right, the Investopedia indicator. What are we watching this week? We're watching the U.S. Dollar index, right? This is the dollar index. This measures the strength of the dollar against 6 other major currencies, according to Investopedia, my favorite website. The U.S. dollar index measures the value of the U.S. dollar relative to 6 other currencies. Those are, of course, the Swiss franc, the euro, the Japanese yen, the Canadian dollar, the British pound, and the Swedish krona. We know the dollar has been under pressure so far this year because of tariff talk, because of the tariff threats. We know that a lot of investors have been bailing out of the dollar in favor of some other things like gold, namely. We also know foreign equity markets have been attracting a lot of money. But since the escalation in the Middle East last week, certainly over the weekend, we have seen a flight to safety, relative safety of the dollar as investors are piling in looking for a safe place to park cash. The dollar index has been under pressure against those other major currencies. This is the week that it revives a little bit, gets the dollar a little bit stronger against that basket of other currencies. That will be an indication that investors around the world are rewarming up to the United States as a potential safe haven and a safe place to park their cash. That might mean we'll see some stabilization in the fixed income market as well. So sometimes bonds rule the world, but this week we're going to be watching the dollar pretty closely. Justine Clark coming in with a question. What do you think will be the best stocks under a president? If you never know the right stocks, then is the unofficial advice to just look to ETFs for diversification and managing risk? Absolutely. Great question, Justine. But you should also know which way the wind is blowing. We know this administration, for example, pro-crypto, pro-deregulation, could be good for the banking industry. We know that it is pro-oil and gas, drill, baby, drill. We know that it is going to make things a lot easier for mergers and acquisition staff, and that's good for the banking sector. So know what the policies are. But then if you can't pick the right stocks, indexing is pretty much undefeated. I recommend that. ETFs are a great way to do that, or index funds. But make sure you're kind of aware of what's happening in the policy land, because policy can affect stock performance. Neldrim saying, is gold bullish this week? Well, gold's been bullish all year. Gold is riding the golden wave, so to speak, of the flight to safety. So, when people are worried about the markets and they're worried about what's happening in the world, they hang out in gold. And gold has been at record highs. I don't expect that to change anytime soon. Ashish S. Can AI predict the stock market and do analysis? No better than someone like Dan Ives. Listen to the experts. AI can tell you the basics, but it can't tell you why. It can't tell you what to do next. You want to know what stocks perform best under certain administrations, or what's the best stock performance this year, or what companies are in an index or in an ETF. AI is fine for that. But if you really want to know the why and then the now what, human beings, experts like Dan Ives of Wedbush Securities, and a lot of the folks that we talk to here at Investopedia. But very good question. Tunde says, yeah, track Nancy Pelosi. I say do your own research, but it is fascinating to see what the politicians are trading. So many good comments. Thanks so much for tuning in. We're doing this every Monday live at 10 a.m. But if you miss the live podcast here from the New York Stock Exchange, I'm going to put this up on demand on all the podcast platforms, wherever you get your podcast, with the show notes that will have links. There's a QR code for you to make sure you're tuning into the Investopedia Express. We are live every Monday here from the New York Stock Exchange. Again, on demand if you miss us here. Write in. We love your comments. We're just getting this going. So thanks so much for watching. We will talk again a little further on down the line.